And I see Jacquie Munro is up. Jacquie, can you hear me?
I can hear you loud and clear, John.
Great. Well, where are you broadcasting from today?
I'm actually right on the coast. I'm in a hotel because we've got gale force winds up in the mountains, and I thought a tree might fall on a power line and I'd have no power. So,
Well, we've had speakers have their houses burned down, their internet go down, hurricanes come through. So a tree falling down on your internet line wouldn't be outside the ordinary. Oh, and we've had speakers have babies too.
all right, okay, a bit of everything.
Exactly. So go ahead and get your PowerPoint up.
Okay.
Uh, Jacquie Munro holds a Master of Business Administration and has 30 years of experience in the markets. Her varied background includes working as a cowgirl and a decade in a hospital treating alcoholics and drug addicts. After completing her MBA, she dove into the markets working at Mad Hedge Fund Trader and now spends her time helping others learn about trading. Please welcome Jacqueline Munro and her session, The Road to the Future is Paved with Commodities. You think so?
I
Nice
def
picture. I see a nice road. The question is, are you driving on the right side or the left side?
I'm driving on the left side
All right.
presently.
Uh,
Okay, thank you, John, and thank you all the team that's helping out there. Okay, so as we know, the road ahead is paved in commodities, and it certainly will be for at least the next 10 to 20 years. And I'm going to show you why I think that. Okay, so I'm just going to follow up with that. I'm actually not going to talk about and try and sell you a system, a book, a program, a pamphlet, or anything like that. I'm going to take a different angle today. Okay, so why commodities? The AI boom may look immaterial, but it is actually built on commodities. So the history of AI is also a history of energy, metals, mining, and infrastructure. So fiction imagined the intelligence, industry assembled the material base. The AI revolution did not arrive unimagined. Popular culture and literature had already mapped its emotional and political terrain decades earlier. On one side, you had the Jetsons, and if you, like me, in the baby boomer generation era, you'll remember it very well. If you're not, I will tell you about it later. A cheerful vision of automated domestic life, smart machines, labor-saving devices, frictionless convenience, and a future in which technology dissolves everyday effort. On the other side was Orwell's 1984, which imagined not convenience but control, a world where technology intensified surveillance, centralizes power, and narrows human freedom. So automation as liberation and technology as domination. What fiction grasped early was not the precise form AI would take, but the social logic surrounding it: dependence, efficiency, monitoring, and power. So the Jetsons. The Jetsons was an automated sitcom first aired in 1962. It follows a family who live in sky-out apartments in Orbit City. They inhabit a gadget-filled vision of the future, set in the year 2062. So we see flying cars, robotic helpers, and push-button convenience are the norm. The show predicted real-world tech like video calls, 3D printed food, smart homes, automated vacuums, and smart watches. The modern commodity boom reflects the physical reality of building a Jetsons world. The push for green energy and artificial intelligence creates surging demand for the very metals that power these innovations. 1984 is a dystopian novel written by George Orwell, published in 1949. It explores themes of totalitarianism, surveillance, and individual freedom. The main themes of 1984 include government control, loss of privacy, manipulation of truth, and the dangers of totalitarianism. It is still really, really relevant today, as it offers a warning about the potential dangers of oppressive governments, manipulation of truth, censorship, and the importance of privacy. So let's take a look where we are now in history. Okay, so if we follow, here we are here, around about here. We're at the very beginning of a secular bull market in commodities. So my advice would be to start positioning yourself right now for the long bull run ahead, which will run up to at least 2045. And, you know, not only gold and silver will rally, but also platinum, palladium, oil, natural gas, and many others. So you can see here in comparison, we have the Cold War, post-World War II, the US Civil War, Napoleonic Wars. So this boom always seems to correspond with conflict. So there's a cycle and a pattern that happens just over and over again every 80 to 100 years. And I'll talk about that a bit more later. So in his book 1984, Orwell's vision has been realized today in our modern world. We have invited it into our lives and in our own way are supporting the commodity super cycle. So I just want to play this short clip to show you this.
See this graph?
Hopefully this works.
Imagine waking up in Oceania. The telescreen hums in the corner of your bedroom, its unblinking eye fixed on you. Every movement is monitored, every word recorded, every thought, if spoken aloud, catalogued and judged. This is the world George Orwell gave us in 1984, a vision of totalitarian horror where Big Brother watches, always watches, and the price of surveillance is your soul. Now imagine waking up today. Your phone sits on the nightstand. It knows where you slept. It tracked your heart rate through the night. Your smart speaker heard you murmur in your dreams. Your browser, before you've even opened your eyes, has already predicted the anxieties you'll feel today, the products you'll want, the thoughts you'll think you chose freely. Here's the paradox Orwell couldn't have imagined. His citizens feared Big Brother. They were terrorized into compliance, broken by torture, destroyed by the machinery of the state. We pay for ours. We carry it willingly in our pockets. We invite it into our homes. We call it convenience. 1984 didn't overestimate the future. I underestimated it. Not because surveillance became more invasive, but because it became invisible, seductive, and voluntary. The cage was rebuilt, not with bars, but with apps. The telescreen was reimagined, not as a tool of oppression, but as a portal to connection, to knowledge, to everything you've ever wanted. And so the question we must ask ourselves is this: what happens when the cage is so comfortable we forget we're inside it? When the jailer isn't a man in a uniform, but an algorithm that knows you better than you know yourself? This isn't a story about technology as a tool. It's about technology as a new form of power, one that doesn't announce itself with jackboots and flags, but with notifications and recommendations. A power that doesn't break you. It shapes you, and it does so with your permission. Let's talk about how we got here.
Okay.
To understand surveillance capitalism, you have to go...
Stop that there. Okay, but you get the idea, okay, of what Orwell was talking about. And now I have shut myself out completely. Oops, what have I done? Oops. What have I done? What have I done? Oh, here we go. Sorry about that. I've lost myself for a minute. Okay, so you get the picture of what Orwell is talking about, how we actually invite it into our homes and actually pay for it as well. Okay, so surveillance. Amazon knows what we buy. Google knows what we like, our interests, how we think. Alexa listens to us. Our tech in our cars knows where we have been, how far we have driven, and what we have said in the car. Our Apple Watch knows about our health, activity, and many other things. So this is data that's all being collected, and it's actually being sold to the highest bidder. So let's turn to precious metals. Where do we think we are now in the bull market? Have we missed the boat, or are we in the middle? We're actually right here. This is where we are now in the bull market in precious metals. This is where the accumulation phase started in around 2020. And now we're here, and this will be about when the distribution phase starts around 2028, 2029. So we've still got a long way to go. This is the gold weekly chart, and you can see this huge run up, which started in around 2024, and the big blow off top here. And you can see why we're having this sideways movement here to digest this huge movement that we've had in the last couple of years. So once we digest this movement and maybe even come back to this 50 moving average, we'll start the huge rally once again. And it's the same story in silver, sorry. After this huge rally up, we've got this digestion movement and sideways consolidation movement here. And we'll pull back a little bit more probably and then run back up to make new highs. So gold predictions, they've been many and varied from several analysts, but they've even surpassed where we are now, because even the predictions for 2026 was 4,700. And I mean, we've way surpassed that already. So the prediction for 2030 is about just over 9,000. I mean, I can see us getting to 9,000, 10,000 just in the next couple of years. Okay, central bank gold purchases. You can see here just in the last few years, central banks have increased their gold purchases by more than 1,000 tons each year. And since the post-GFC environment, this is when it all started here. Central bank gold purchases. China, as you can see at the top, has taken out top position for the purchase of gold. And it's really interesting to see in second position, Poland has significant purchases as well. And the purchase of gold shows a growing distrust of the existing Western financial system and the gradual increase in the economic importance of emerging markets. The Economic Policy Uncertainty Index, and this is really a new normal of turbulence that has happened. The index shows that uncertainty has spiked to historically high levels, driven by events like COVID-19 pandemic, Russia's invasion of Ukraine, and the increased geopolitical fragmentation. I mean, we just have to look at Trump's actions in the past couple of years with his list of countries that he's wanted to invade. Trust in the US government from 1958 to 2025 is at an all-time low. In 1958, 73% of Americans trusted the government to do the right thing, almost or always most of the time. By 2025, just 17% of Americans now say they trust the government in Washington to do what's right. So trust in the government has been low for decades, as you can see by this chart, but the current measure is one of the lowest in nearly 7 decades. This is a quote from 1984, George Orwell's book. Power is in tearing human minds to pieces and putting them back together again in new shapes of your own choosing. To gain this power, the party uses people as a tool to act on their behalf. So basically, manipulation through technology is the modern form of control. So here we have gold versus US Treasuries. And for the first time since 1996, foreign central banks are holding a greater share of gold in their reserves than US Treasuries. So you can see that uncertainty in the US that foreign powers have. And here's the world gold supply. 29 trillion above the ground, 17 trillion below the ground. And sitting beside the White House, you can see the volume here. So we are basically like squirrels, stashing gold instead of acorns in this very uncertain environment that we're in. But gold and precious metals is not the only metal that is important in this super cycle. Industrial metals also have a significant place. The digital infrastructure that we need now and we're using now includes essential components such as data centers, network hardware, and cloud services that enable digital operations. So it gives us reliable internet, telecommunication networks, which are vital for seamless communication and data transfer across distances. So the emerging trends, future trends are emerging technologies like 5G, Internet of Things, and edge computing will increase efficiency and scalability. So in digital infrastructure, we have and need connectivity, so high-speed internet and network access, hardware, servers, data centers, and end-user devices, software, operating systems, security, very good power supply and consistency, security, and of course, staffing. And the greatest thing we need, of course, is power. So data centers will be a major feature going forward in the future, and energy companies will support this infrastructure. So AI power center demand is expected to increase around 165% by 2030. And these are the companies you should be looking at going forward into the future. So we can see over here in the US, we have this would be an old number now. We'd have close to 5,000, I think, data centers in the US. We have about close to 300 or 400 in Australia. But, you know, the investment in these data centers is massive. It's just huge. So it's just going to increase. So what is needed in data centers? We need gold, platinum, palladium, copper, aluminium, and rare earth minerals, amongst many other critical minerals and elements. And when we come back here to return to the Jetsons, we notice here where they live above the ground and actually above the clouds. And this tells us that in 20 years or so, 30 years or so, this is what our world could actually look like. We will probably well and truly have flying taxis by that time. Our roads and some of our living systems could be way above ground. So it actually brings to mind something that we take for granted. And I think you might know what that is land. The digital economy requires immense space for data centers, server farms, and energy production. Land, remember, is a critical finite asset. And you know how Elon Musk has been talking about putting actually data centers in space. So, you know, when you think about the amount of satellites that are already around in space, floating around Earth, plus Starlink, I mean, it's going to get very crowded in space. I actually showed a video that from 1962 to the present day of the number of satellites that are above Earth, and it's just incredibly crowded. Okay, so copper, the future of copper will be extremely significant. Rapid adoption of copper-intensive technologies will drive high future demand, and copper demand will grow by about 70% to over 50 million tonnes a year by 2050. Demand for copper will outstrip supply within the next decade, and growth rate is expected to jump to 2.6 annually from 2035. And of course, the themes driving this growth are traditional economic demand, the energy transition to green energy, and data centers. So here is a copper chart, and you can see it's just basically just kept going up and up and up and up and up. Way back here from around 2020, I took it from about July 2020. So where will the demand come from? I gave you an inkling just before. So EVs, electrification of industry, solar, grid storage, data centers, Internet of Things, artificial intelligence, and blockchain. Stocks to play the copper growth: Freeport-McMoRan, Ivanhoe Electric, Rio Tinto, and BHP. This is Freeport-McMoRan going right back to 2021, and you can see here it has just recently made a new high. So I've been recommending this right back in around mid-2023 and early 2024. So that's how long way back I've been recommending it. And it will just keep going up. Here's BHP, the weekly chart. I recommended BHP January 5th this year when it was 46.55. It's now nearly 65. And I'm predicting this stock can easily get to $100. But what else do you need in this commodity super cycle? You need heavy machinery like excavators, cranes, and drilling rigs, which facilitate the extraction and transportation of commodities. These machines boost productivity and support infrastructure development, fueling economic growth during commodity booms. So heavy machinery stocks are another aspect of the commodity super cycle you need to look at. And the stocks I would recommend here would be Caterpillar and Deere & Co. Specifically Caterpillar, I really like Caterpillar, and I recommended it first in August 2025 when it was 416.09 cents. And I also recommended a bull call spread around here, which expired at max profit. But you can see it has very minor pullbacks, and as soon as it does, people and institutions are in there buying it. So the wave of demand for commodities, we are actually in the 6th wave of an innovation cycle, and the focus will be on AI, the Internet of Things, robots and drones, and clean technology. I mean, I've even heard a lot of the talk recently about humanoids and about how they will be in our homes, in our hospitals, in our grocery stores, actually everywhere. So that will be the next big area that we will see demand in. And commodities will be the foundation for this wave. So war in the Middle East, the great power struggle, what's next? So we are actually in the 80 to 100 year war cycle. That's what's happening at the moment. So every 80 to 100 years, we have this war and conflict cycle. So when we go back, we can get World War II, American Civil War, American Revolution, and so on and so on. So war cycles refer to recurring patterns of conflict driven by political, economic, or social tensions that periodically escalate and subside. The main causes include resource competition, ideological differences, power struggles, and unresolved historical grievances. And remember, I mentioned Trump just earlier and the various countries he's had on a list to invade, like Venezuela. He's talked about Greenland. He's talked about Iran. He's hit a brick wall there. And he's also been talking about Cuba. So we'll see what happens. And of course, all these conflicts and wars cost a lot of money. And the US is already under a huge weight of debt. So turning this debt around would be like turning a tanker or several tankers around. It's really interesting because last year in February, 51% of all expenditure was debt financed. So, I mean, if this was the first quarter of 2025, we'd be up around here by now in the debt spending. So the public debt for every American, it just keeps going up. So this is a graph to going up to 2050, and I mean, 209,000, I think that's a low number. And the driver of demand for gold, what do you think it is? I mean, it's a whole range of things. Uncertainty, inflation protection, protection against volatility, geopolitical crises, financial crises, and long-term investment. So it's a whole range of things. So the gold and silver stocks to buy. Okay, so these are the ones you should be looking at. GLD, which tracks the price of gold. And back in June 2024, so around about here, I issued 2-year leaps, which expire actually this month. And they were out of the money. They were 260, 270 2-year leaps, and they've done extremely well, as you can see. And I also told all my members to buy GLD around here. So all they've had to do is buy it and just sit on it. SLV tracks the price of silver, and we were in silver at a similar time, February 2, 2024. So round about here at $20.70. And I've even got my members to keep adding at when it's broken down a little. And we've also had very good bull call spreads along the way, which have expired at max profit. Wheaton Precious Metals is another great stock to own, and we got into that February 15, 2025, which was around here. And we've just been keeping on adding to it on these pullbacks. Then we have Barrick Gold. We got into that February 7th, just around here, 2025 at $15.09. That's another great stock to own. So when you're talking about the markets, investing and trading, people say to me, well, what's the one thing that I should know? What's the one thing I should do? And there's really no one single secret to discover to a correct way to trade the markets. There's no holy grail. So, you know, don't keep looking for that, because you won't find it. You have to develop your own philosophy toward trading and investing. So what's increasingly and very important is your mindset. I mean, your psychology and your mindset is at probably 90% of your success. So you need resilience, patience, and focus in spades. Many of us are controlled by FOMO, fear of missing out, or FOMM, fear of making mistakes. So in here, we tend to jump in when the market has moved, or we tend to just sit on our hands because we don't want to make a mistake. So we rush in, either rush in or we play follow the leader. The supremacy of temperament, and I cannot emphasize this enough. Buffett famously said the most important quality for an investor is temperament, not intellect. He believes that once you have an ordinary, reasonable level of intelligence, your emotional control and discipline dictate your success. So just what I have been talking about. So it's a 90-20 split, 90-10 split. Okay, so it's a really good idea to understand market structure and patterns so you can identify opportunities and take advantage of them. That education will arm you with knowledge that will enable you to take advantage of setups in all market sectors. And that knowledge will set you up for life as you can apply it to any sector. Best of all, you are in control of your funds and not tied to any program for years on end. So let's just briefly look at market structure and give you a brief understanding. So firstly, we have accumulation, then we have a 1/3, 2/3 pullback, then we have trend or public participation, and then a 1/3, 2/3 pullback. Then we have the excess stage, and then we have distribution. So it looks something like this. So this is the accumulation period, and this is where the stock is really not doing anything exciting at all. And this is when institutions pile into a stock and the public thinks it looks terribly boring and nothing's happening. So then we have the public participation phase and the stock starts to take off and then the public get involved, okay? So then we have this 1/3 pullback here, and then the public get very excited and pile in more and more and more. And we have what is the excess stage. And this is when people start in these pullbacks here, these minor pullbacks, they really start piling in. And then what happens is this stage, the distribution stage, and this is where people that come in here get really stuck. And this is what happens to them. They lose all their money if they're short-term focused. If they're long-term focused, it's fine because they're in it for the long haul, because the market turns back and then it just follows this same pattern all over again. Okay, so this is what you'll learn about, I can teach you about, is what you've got to be looking for here, this loss of momentum as this excess stage starts to happen. And then you'll know that this is when you need to be careful and get out if you're short-term focused. Okay, so reading and analyzing charts, and it's a really good idea to be able to identify patterns. So things like head and shoulders, double top, double bottom, for example. So here's a head and shoulders pattern. We have the shoulder, the head, and the shoulder, and we have a neckline. But, increasingly, every pattern like this doesn't follow the same pattern, It won't lead to a breakdown, for example. So when you see this pattern, you could put an entry order here, and if the pattern does follow this, it breaks down and it'll take your order, okay? But make sure you have a stop up here in case it doesn't follow this pattern. Okay, here's the double top, and it's a similar story. Here's the neckline here. You'd put an entry order here and your stop up here, and it will take your entry order and you'll have a nice trade. Here's the flag pattern, and this is basically the flagpole, and this is the flag. And you'll notice that if you put your entry order here, the price actually continues in the direction of the original trend once the price breaks out of this flag pattern. 2 points makes a third here, and this is one of my favorite patterns to follow. So here, and here's the neckline once again. And also we can have false breaks. So you need to be mindful of this sort of pattern happening. And this is why many people get taken out, their stops get taken out. It's like a false bullish price movement here. And then it can break down under this neckline here. And this distance from here, the neckline to the top here, is your measured target. So that's what you measure from there to there, and this is your target. Okay, Japanese candlesticks in trading are also a really good idea to have some knowledge on. They can really help you know what's going to happen and what potential movement will take place in a stock or an index. So here's a morning star pattern, for example, right at the base. You'll get it right at the base of a range, and it has the potential to signal a very bullish movement. So if you see this at the bottom of a range, that's very, very bullish. And here is a hammer candle. This is also incredibly bullish, and this is actually on a 12-month chart. So each candle here is 12 months, 1 year. So this is a very bullish candle, or a pin bar, as I call it, at the base of a range is potentially very bullish, and we can see this potential has played out very nicely. And this is a doji candle, and it can also signify indecision and a change of direction. So if you see those candles together, that's a very powerful combination. So are you a trader or an investor? What is your philosophy toward trading or investing? If you are a trader, it takes you a long time to learn, and only a few make it through the first 5 years, and 80% quit within the first 2 years. So maybe being an investor may be a better idea. This is the stock market return over the past 90 years. So you can see the median annual return was about 14.32%. So, I mean, that's really not too bad for a set and forget sort of portfolio. So predictions are that the S&P can rally up to 14 or even 15,000 by the end of this super cycle. There have been 2 secular bull markets since 1929, with both generating returns of 2,300%. So if the current super cycle, which has started here, generates a similar rally of 2,000%, the S&P could move toward 14,000 or even 15,000 by 2034, which is when we expect the current 16 to 18-year secular bull cycle to peak. So we actually have a long way to go. And what's going to get us there? And I've already been talking about it. AI and technology. It will be the absolute supercharger that will impact all sectors. Health, whatever you can name, health, finance, transport, agriculture, housing, retail, anything you can name, it will impact. We will see all these, we'll actually see flying vehicles within the next 10 years, DNA computing, 4D printing, nanoscale 3D printing, anti-aging drugs, miniature AI, teleportation, zero-proof knowledge, space mining. I mean, as Elon Musk says, we could see data centers in space. And quantum internet, that will be a really big one. And as for the advances in medicine, they will be huge. So you already know a little bit about me. I worked in a mental health and alcohol drug unit for around 15 years. I studied for several years while I was working, got several degrees, finishing with an MBA, run my own fund, worked for Mag hedge fund trader for many years. And as I was talking about earlier, I even had a stint in the outback as a jillaroo or cowgirl. My big passion is education. I sent my son to a private prep boarding school in Wokingham in Berkshire in the UK. He was 8 years old when he started and 13 years old on his final day. First day, final day. This is the school, Ludgrove in Wokingham in Berkshire. So how do you benefit from my product? You get 3 newsletters a week, and I talk about the markets, the economy in different countries, geopolitical situations. I talk about different sectors or social issues or even individual stocks. And if I give a stock recommendation, it is also embedded into my post, so it won't be separate. John holds a webinar once a fortnight, and I summarize this webinar with main points and extra notes. I also give out, as I said, trade alerts, and these were just some of my trade alerts in 2025. And actually all of these expired at max profit. And so everyone did really well in 2025. I use different vehicles also in when I give out trades. I use stocks, options, leaps, and ETFs. So by different vehicles, what does that mean? So if I'm talking about the precious metal sector, say I wanted to buy gold or silver, I could buy a small parcel of GLD, for example, that tracks the price of gold. I could purchase options. I could purchase GDX, that's the ETF. So basically you are spreading the risk and absolutely multiplying your returns in a massive way by incorporating various vehicles. So you're not just concentrating on one thing. I also hold Zoom monthly meetings, and I actually just held my, what are we up to, May? I held my May Zoom monthly meeting this morning. So these happen either at the end of the month or beginning of the next month. So I give a presentation, and that's followed by discussions, questions, just about stocks, the geopolitical situation, the world in general, anything anyone wants to talk about. They can share ideas of what they're doing, opinions about what's happening in the market in different economies around the world. So what I do is I tape the presentation. I stop the recording, and I let people speak without being recorded, because people, I found out, don't like being recorded because they really can't speak freely. So this morning my presentation started at 10:30. It ended at 11, and the Zoom meeting was still going at 12:30. So everyone was still happy for a chat. So I eventually had to end it. So very, very popular. Testimonials here. I won't read all these out. Just a few words here. She's very generous research, answers esoteric financial questions, a rare resource, very consistent with accurate analysis, thorough research and clear communication, ability to distill complex market information into accessible updates. Her insight provide real value, according to Linda. This is Mike from Seattle. He's been with my service from the very beginning. It's been a success from the start. Insights on the markets and timely picks have been gold, and he's looking forward for many years to come. Anne Marie from Melbourne, Australia. Guidance is clear, data-driven, and delivered with precision, right down to specific dates and numbers. Monthly reviews and open discussions provide real-time learning and valuable support. Excellent financial decision for me, highly recommend. Okay, so what you receive with Jacquie's post. You receive 3 newsletters a week, a summary of John's webinar sent out once per fortnight. Trade investment ideas will be shared when the risk reward is in your favour. Monthly Zooms to educate, share ideas, experiences, and ask questions. So this year, as you've probably seen, with all the geopolitical events and skirmishes that have been going on, it's been a really, really tricky trading environment. So I haven't sent out a lot of shares and trades to buy, and I'm mainly now looking at long-term trades like leaps to bypass all the noise in the market. So the price in the store is $5.97. So your price for today is only $3.97, which is for 6 months. That's a saving of $200. And you're actually going to get a free trade alert, which I will show you next and go through next. So if you're interested, click on the link in the box on the right. So this is our mystery chart. Do you know what this chart is? Is it a buy or is it a sell? If you purchase my product today, you will receive this free trade alert direct to your email. So what do you think it is, a buy or a sell? Okay, so the opportunity is calling. Take a chance and change your life. Join the Jackie's Post community and learn about the markets. Grow your knowledge, invest in yourself. Remember, my background is in education, communication, literature, and business. So, and I'm passionate about educating. So I'm sure you'd benefit enormously if you joined. So it's $3.97 for 6 months. And click on the link in the chat box on the right. So what does Warren Buffett say about the best investment you can possibly make? He says the best investment you can make is an investment in yourself. The more you learn, the more you will earn. So I want to thank you all today for taking the time to listen to me wherever you are in the world. I want to thank you for listening. I hope you got a lot out of it. I hope you learned something, and I hope you took some notes and will join our fabulous community. And if you wanted to, you could even send a note to John or Philomena, and I can give you free access to the June Zoom monthly meeting so you can get a feel for what Jackie's Post is all about and what it's like and why people stay for 2 hours on that call. So I have finished my presentation, and also people ask me if the price stays at $3.97 for 6 months, and yes, it does. So it's only $3.97 for 6 months going forward if you buy it today. So I will hand back to John now. Thank you all for listening, and I hope to see you soon.
All right, Jackie. Well, thank you very much. Great presentation. I totally agree with all of your conclusions on the commodity super cycle, and I've made quite a bit of money from super cycles over the years.
Yeah.
So I guess it's freezing cold down there because it's in the dead of winter.
Yes, I've got 3 layers on.
Wow, that sounds severe. And that
Yes.
explains why the beach in this picture is completely empty.
Yes, that's it. That's it. It's empty.
Um,
Only the diehards are there. You see the
yeah, I can
2
see. Yeah,
diehards?
yeah.